Welcome to part 2, and in this video we're going to be going through the mortgage calculator. This is hands down the best part. Now it is going to be a long video, but I do recommend you watch it through and just learn everything about this section. But without wasting any more time, let's get straight into it. So the first thing you want to do is update your financial information. At the top you can put in your salary. If you're getting paid on an hourly basis, just take your average from the year, or you can use the previous year just to make this up. Now obviously with lenders they will ask you for your pay slips and all that stuff as well, so do make sure you keep that in mind. And then underneath that you want to put in your total savings. So as time goes on, just come in here and update this. Next we need to select whether we're a first time or a subsequent buyer. Now again, make sure you're picking the right option because this definitely will impact your results at the end. In my case it's a first time buyer. Then underneath that we select the buyer information. Here you can put in whether you're single or a joint applicant, and if you are a joint applicant you need to put in the oldest applicant's age. But if it is a single application, then you need to put in your age, and then below this you need to put in the number of dependents. Generally this will mean your children, but that's not always the case, and if it is someone that's legally dependent on you, then you need to account for that as well. And then next we'll move over to the monthly finances. So here what you need to do is put in your average monthly income. So generally this will be your net income, and again if you're getting paid on an hourly basis you need to just make an average of what you usually get paid. And just below that we put in the monthly rent or any existing mortgages, and then your total savings per month. Now in this case if you're saving different amount each month, again just take the average and put that in. So next we'll move over to annual variable income. So this is basically your bonuses and commissions and any overtime that you're getting paid. Also if you're making any investments as well, you need to put this in here. Now you can see here it does have extra information just letting you know that lenders do generally require up to 3 years for non-guaranteed income. So basically income that you're making on the side, so if that's investments, bonuses, commissions and all of that, so you need to make sure you put that in here. And then next we'll move over to existing loans, which is the last section. Now there's two options to this. You have non-expiring monthly loans, and then you have the opposite, which is expiring monthly loans. So in my case I've put in my car loan, which is a non-expiring at the time, and this basically means it wasn't going to expire by the time I drew down my mortgage payment. Now expiring is the opposite, so if it's going to expire by the time you draw it down, then you need to put that information in here. Once you have all of that done, just click on calculate, and you can see the top section, it gives you your LTI or your loan to income. So basically your LTI is 4 times your salary. In the past the LTI used to be 3.5. I think they changed that about 2 years ago. Now there's also an exception just here as well, which is up to 4.75 times. Now do keep in mind exceptions are very limited, and lenders tend to give this out at the beginning of the year. So if you are going for an exception, you need to make sure you have your application in within at least the first 3 months, because generally exceptions will be handed out by then. So I would definitely recommend you get your application in as early as possible. And just at the middle section you can see it tells us all the estimates based on the finances. So we have maximum affordable monthly repayment, and it's just over 1,600. So basically you should expect to be paying this at a maximum per month for your mortgage repayment. And then we have the maximum loan amount. This is basically the exception just above, so it's going off of that. I would generally look at the LTI because again exceptions are limited. And then the last part in this section is the maximum home price. This is basically the maximum home price that you can afford based on the current inputs. If you're looking for a property, then you need to make sure the property is within this bracket, and again this is all based on the exception, so do keep that in mind. Now the last section is just the mortgage information. So you can see there's some options that you can edit, and that includes target home price, loan amount, interest rate and mortgage term. You can also click on the icon just to get more information and a description. So basically in this section, if you find a property, you need to come in here, put in your target price and the loan amount. Now you can see in my case 10% of the property, the loan amount should be 306k, and you can see down here the LTV changed to 90%. So we'll bring that back and I'll go through why I've done this just so you can see how I was calculating. Now obviously you need to put in your interest rate, and if you're looking for all the rates you can come in here and check this out as well. I will be going through this section in the last video, so do make sure you stick around for that. And then of course you can select your mortgage term as well, just put that in. Now in my case, the reason why it's at 305k and the LTV is now at 89.71 is because I gave 5,000 in a booking deposit to the estate agent, and then I got 30,000 from the Help to Buy scheme from revenue. Do keep in mind, Help to Buy is only available to first time buyers, and of course it needs to be a new build or a self build. So you can see basically I ended up paying 35,000. Now that's it for that section. If it is still a bit confusing, definitely ask a question and I should be able to get back to you. Now the middle section just gives you information on your mortgage repayment. So we have the monthly repayment based on all the information we've put in. Cost of credit. Now this doesn't take into account whether it's a variable interest rate. So obviously as time goes on, this will change once you've passed through your fixed interest. And again, you can see the LTV is just 89.71. Ideally, if you're a first time buyer, this should be at 90%. Subsequent buyer, it's usually at about 80%. And the last section here is just on the savings. So we've the deposit, the stamp duty, and the one that a lot of people tend to forget is all the additional costs when it comes to buying a home, such as your solicitor's fees, your surveying costs, and of course your bank valuation. There's still a few more in terms of like mortgage protection and home insurance, so do keep all of that in mind when it comes to this. Ideally you should be keeping an extra 1% when it comes to the additional costs of the property itself. Now stamp duty is 1%, and of course if it's over €1,000,000 it's going to be 2%. And finally we can see the total required savings. Now this is basically making a sum of the deposit, the stamp duty, and the extra costs, and that's how we're getting 41,900, and it compares that to your total savings currently. Now if we were to go back and change this to, let's say, 25,000, and then we calculate it again. Now if we have a look at the loan amount, you can see information telling you that this loan exceeds the estimated maximum of how much a lender will allow you to borrow. Once you do get to the maximum, it will change that up. So if we go back again, now let's actually change it to the maximum and then calculate again. You can see the warning is gone on the loan amount. This calculator is definitely the best on the market at the moment, and again, in my opinion, this is the best part of Lively. So if you're looking to buy a property, definitely recommend you use this. But anyway, that is it for this video. In the next one, I'll be going through the Your Team section, where you assemble your team in regards to your broker, solicitors, surveyor, and insurances as well.